Wall Street champions, that leads very neatly into business, doesn't it? Stephen Carroll's with us here on set. Stephen, you're looking at what Donald Trump has said about the economy in that speech, haven't you?
Yeah, we had been hoping to get a little bit more detail from the US president on his economic policies. The speech, though, mostly repeated promises that we'd heard before without adding much detail. President Trump again said that he wanted to cut taxes for companies and the middle class. He also said that he wanted fair trade for American firms by ensuring that imports were subject to tariffs like American goods going abroad. He also reiterated plans for $1 trillion in infrastructure spending funded by public and private capital. Let's take a look at what's happening on the markets and how they've been reacting to those comments by Donald Trump. We've got shares in Europe opening up at the start of the day. 0.5% you can see in London, gains 2 in Paris and in Frankfurt as well. That's being driven a lot, though, by commentary about the Federal Reserve and what they might do about interest rates in the United States. Over in Asia, a rise in the dollar against the Japanese yen, helping shares on the Nikkei in Tokyo, also being helped there by some good figures about the country's manufacturing sector. The Nikkei in Tokyo finishing the day up 1.4%, gains 2 there on the other Asian markets, as you can see. Well, let's drill a little bit more down into how the business world has been reacting to Donald Trump's speech. We can go to London and speak to Craig Erlam, who's Senior Market Analyst with OANDA. Craig, thanks for being with us. What stood out for you then in President Trump's speech?
To be honest, the thing that stood out most was the significant lack of detail that comes, or seems to come, with all of Trump's speeches and all of his pledges when it comes to policy. We heard a lot again about the need for reform, big spending. We know that he plans to increase infrastructure spending, for example, by $1 trillion, which is quite a staggering amount. He still wants to repeal Obamacare, which is nothing new. But again, there was no real detail in anything that he was saying. There was no suggestion of how they plan to raise the funds needed for all of this spending. Like I say, an absolutely huge amount of spending, but no real detail on how they plan to raise the funds. They talked about economic growth being potentially a driver of these funds. Of course, they want to reduce federal spending, but when you're also talking about increasing military spending by around 10% as well, the math just doesn't seem to really add up at this stage, and that is what the markets want to hear, as well as details of where the spending is going to go, so they can work out what kind of impact this is going to have ultimately on corporate balance sheets. So we're still lacking any real detail at this minute in time. The market's not too deterred quite yet, but you do think that it's probably only a matter of time until we start to see that.
There's a question too here around timing, isn't there, as well? I mean, investors are waiting for that infrastructure spending, they're waiting for those tax cuts, but there's no indication of when they might actually come.
Exactly. One of the things we heard from Steve Mnuchin last week, the new Treasury Secretary, was that it looks as though the tax reforms are going to come later in the year, maybe August, September time, and they're unlikely to have a stimulative effect on the economy probably until 2018. And that's assuming, of course, that these do pass through Congress, which is by far and away not a guarantee. I think a lot of the things that Trump's promised, he's been a bit overwhelmed by just how long these things take and how complicated they are. He said only a few days ago no one saw the repealing of Obamacare being so complicated, although many political commentators would certainly disagree with that statement, and I'm sure Barack Obama himself would. I think what we're seeing to an extent is Trump's naivety. He's come into office, he's promised an awful lot. I do genuinely believe he plans to implement them, and I think we are going to see big spending and tax reform, but I think it's going to be a lot harder and take a lot longer to actually put into action, and that is where we're going to see Donald Trump really testing the market's patience.
Another matter definitely on American investors' minds is what the Federal Reserve is going to do next. Looks like an interest rate hike could come sooner than we expected.
Yeah, we heard from 2 or 3 more policymakers yesterday. The 2 that really stood out were William Dudley, who's a permanent voter with the FOMC, and John Williams, who isn't a voter until next year. But both of them seem to be very much aligned on what they were saying, talking about the near-term prospect of an interest rate hike, a much tighter labour market, And I think it was William Dudley who said the case for a rate hike is much more compelling. So it does seem that March is very much on the table. I still think the Fed are really likely to lean more towards May. But I think the message the Fed wants to send right now, which is something the market's taken some time to get on board with, is that every single meeting is live and they should go into every meeting anticipating that a rate hike could happen. And this time last week, when markets were only pricing in a 20% chance of a rate hike in March, that simply wasn't the case. Now it's above 60%, and it seems much more in line with what the Fed wants us to believe. Finally, it seems the Fed's leading the market, not the other way around.
OK, Craig Erlam, Senior Market Analyst with OANDA, thank you for joining us from London.
Finally from
Thank
Stephen, the boss of Uber, Stephen, has been forced to apologise. This is after having an argument with a driver.
Travis Kalanick got into a heated debate with a driver earlier this month. The conversation was filmed, in which the driver, Fauzi Kamel, complained about Uber's history of lowering earnings for its drivers. Now, the CEO responded by saying the driver should take responsibility for his own problems. Things got pretty ugly after that. The CEO ended up swearing at Mr. Kamel. He's now apologised to him in a blog post, stating, "To say that I am ashamed is an extreme understatement."
Poor chap, caught out.
Won't take his own cars for a while, maybe.
That's true. That's Stephen with Business on France 24. Let's get back to